All right, so back again to discuss the recent sale of Tri Pointe Holdings. This is a position that we exited in February of 2026. And like we've been doing, we want to explain the thesis, how the thesis played out, why we chose to sell the stock. But before we get into that, Peter, I'll start by asking you, give us a little bit of the background on Tri Pointe Holdings, going back to when we first identified it as a possible holding. What attracted us to that, and just a little bit about the business and why we liked it.
Sure. Let me just first say our objective anytime we're buying something is to find hidden gems that are unloved and unwanted in the investment world, wherever they may be and whatever level of capitalization. But if we go back to our original understanding of Tri Pointe, or when we became intimate with it, or initially became familiar with it, very often it's years and years later that we actually make the purchase. And in this case, it was exactly the scenario. The Tri Pointe came about with Weyerhaeuser selling off their home building unit, and they merged with another smaller company that went public called Tri Pointe Holdings. In 2014, it was a $2.8 billion transaction, and that company went on, and we just kept an eye on it from time to time, and so that's when we initially became familiar with it.
Take me back to I know you have these details in front of you. When did we make our first purchases in Tri Pointe?
The first purchase was made on July 26th of 2022. We paid $18.08, and like so many of our investments, it was down considerably from its 52-week high. It was the 52-week high was just over 28, and the low was near 15. So we were able to purchase it near its 52-week low at that point in time.
And what was going on with home builders? Because there were certainly other home builders whose stock had declined and was trading near their one-year lows. But what was going on in the home building business as a whole at that time?
The home at that, well, first of all, if we go, there's been underbuilding since the financial crisis in 2008, 2009. But back in 2022, as you may recall, the stock market in general was extremely weak. So it wasn't just Tri Pointe, but interest rates were rising. There was the talk about a potential recession, and home building was also fears of that it was going to decline as well because of those other factors that were involved.
Great. Dominic, how about from your perspective? You were involved in the vetting out of this investment. What do you remember about Tri Pointe and what attracted us to it back in 2022?
Yeah, I think one of the reasons it was so statistically cheap was they earned a lot in 2020, 2021, and maybe like the first part of 2022 when interest rates were low and the demand for new houses were basically like insatiable. If you remember, like 2021, interest rates were, you could get a mortgage for a low 3%, and just when interest rates are at that price, many people can afford it, versus when interest rates are 6%, 7%, the number of individuals that can purchase a home declines. So there was some concern about future demand when interest rates are 6, 7%, what that would do to Tri Pointe. And we had liked the capital allocation decisions that the management team had made prior to us purchasing it. I think one of the things with home building or any sort of levered or highly operating leveraged business is you kind of have to have confidence in the management team isn't going to go out and overexpose themselves, because there were some instances where home builders would extrapolate the 2021 results and go out and buy more land because they think that demand is going to continue to increase. And if you own a lot of land when demand isn't there, that can get you into trouble pretty quickly, as we know with another holding of ours. So people are concerned, combat that with maybe a potentially weaker economy. And the setup was you have people that don't like the industry combined with the stock market is relatively weak. And I think that's like a good setup to get a really attractive investment.
Absolutely. So we bought Tri Pointe at 18, and tell me about like just how that investment behaved during the 4 years that we owned it. Did we add to it? What was going on, and what was our overall monitoring process and experience of owning the business?
Sure. Well, we began listening on a regular basis to their investor calls, and we continued to develop confidence in the management team. And one of the major levers that they were using in terms of capital allocation was share reduction. And in 2014 there was 162 million shares, and last year it was down to 90 million, and it continued to repurchase. So it was a dramatic reduction in the share count, and we really liked the management team. They received awards as one of America's top home builders, and as recently as January of this year, they received an award as one of the 100 most admired companies. And we're talking about a tiny little business, so to become part of that list is an absolutely amazing scenario. Having confidence in a management team, of course, is critical, but we also want to own things that are not trading at lofty prices. But it did actually rise up we went from 18.5, I think it went all the way up to 47, and then the home building stocks dropped off dramatically over the last year, and it came back and it was trading in the low and mid 30s, and we continued to add to our position we added to it in the I think the lower 30, maybe 33, or I think for our clientele as a whole. And on an individual basis, we continued to increase the position as well. And I did not foresee a buyout happening there.
So Dominic, anything you would add to the monitoring and experience of holding Tri Pointe?
Yeah, I mean, when we bought it, I'm going to say there's really two metrics that matter. It's the backlog of the company and basically how many lots or communities they have for sale. And when the market is pricing the stock at 4 or 5 times earnings, they're basically saying you guys way over earned in the past, and that's going to be totally different in the future. And so all we needed to monitor was, hey, what are the new orders coming in looking like? Are they at prices similar to what they've done in the past, lower, higher? And then how many orders are they taking in? And one of the things that we learned, at least I learned a lot about, is the competitive advantage of a large home builder versus a local or regional builder. Tri Pointe has a financing arm, and so they were able to lower the interest rates for new home sales from 7% to maybe 5 or 6%, which local builders don't have access to. The buyer would have to go to their local community bank or regional bank and buy down using points to get their interest rate lower. And so by Tri Pointe being able to pay down the mortgage as basically a compensation or like subsidy for the buyer. So instead of maybe getting improved fixtures, the buyer would then get a lower mortgage rate instead. And them in Tri Pointe being able to do that, I think, along with the larger builders, allow them to take market share from other local players.
Yeah. So they had a little bit better scale, and therefore were able to attract more new business. Why don't we talk a little bit about our exit and what exactly happened that caused us to sell otherwise well-performing business and well-performing stock in the portfolio?
Well, they Tri Pointe's getting acquired for $47 from Sumitomo Forestry. The transaction's expected to close in the second quarter. The stock is basically trading right around the purchase price of 47, because there's no regulatory hurdles that really need to be cleared. It's more of a formality. So we decided to exit because there's not much left in the stock to go from, I think it's like 46.50, from 46.50 to 47 is just like not worth the risk in our opinion to hold it and wait for the closing of the transaction. So we exited our position, and it was a great performer in the end.
Yeah.
A little bit about the Manual of Ideas last year that Dominic and I attended in New York City. And in particular, how it relates to Tri Pointe. One of the presenters who has a terrific track record and manages about $5 billion, and his investment style is very similar to ours, or ours is very similar to his, depending on how you want to look at it. He was a big fan of the home building area because he felt that the prices were significantly depressed. And so he had mentioned several companies such as Lennar, and I think NRV or NVR was another, and that he has about 40% of his business in that. And I asked him specifically about Tri Pointe, and he was quick to point out that very much like the thesis, the scenario that Dominic talked about, where the local home builders versus the larger home builders. And that's exactly what the point was that was brought, is that I asked him what he thought about Tri Pointe, and he said he likes the larger home builders because, once again, the exact same scenario, the really large home builders have a significant advantage even over Tri Pointe. And of course, some of those companies are still trading down significantly. I think I looked yesterday, and I think we're trading at about 106 or something of that nature on Lennar. So there's an example of an opportunity to jump back into the pool with a different home builder and build upon that exact same thesis that we continue to feel very strong about.
Yeah, so why don't we talk about that specific sector, home building, and there are a number of other positions in our portfolio that share a similar thesis about homes being underbuilt and not having enough supply to meet future demand. And maybe just talk to us about what you see in that space and why we think it's an area where deep discounts can be found even in today's, elevated market prices.
I think it's really interesting the consolidation that is happening across the entire like vertical spectrum from lumber producers. There's been a lot of M&A in that space. Then if you build up to like the building distributors, the products like a Builder's First Source, they've been consolidating the industry. And now there's been a couple transactions in the actual home building space. So the whole industry from start to finish appears to be going through some consolidation. And consolidation, depending on how you want to look at it, is probably going to be relatively good for the home builders because they're going to be able to buy more lumber at typically maybe like a more bulk volume, but should allow them to get lower prices. And then if you filter on down through that, like Builder's First Source should be able to bargain better with the lumber producers. So the whole value chain is starting to, I guess, consolidate. I think in the near term, on the home building space, Tri Pointe just came out with their Q4 results, and the outlook isn't that good. I think 26 looks relatively challenged. Their backlog of homes is down. I think it's close to like 50% from the same time last year, and presumably that's because anybody that's been able or wanted to get a home built at, call it a 6 or 7% interest rate, has done so, and now we're kind of fizzling out towards the number of potential buyers that can afford to buy a home at that rate. And so I would not be surprised if you see more consolidation in the home building space. There's two things. One, you can get geographic diversity where Tri Pointe has properties anywhere from like Arizona, California, all the way to North Carolina. So they're a good target in that sense, where you're not you don't have a risk of, hey, they only have properties in Texas where it's significantly overbuilt right now, and now you have to worry about what the next couple of years are because you don't know what the demand's like, versus a Tri Pointe that's geographically diverse. And I think you're just going to see more consolidation in this space, and NVR, Lennar are probably going to be the ones consolidating the industry. I don't see these small guys. Maybe you see like a merger of equals to diversify your customer base, or it's going to be your large guys swallowing up some smaller guys.
Got it. Peter, how about you? What do you like about the home building thesis, and what are some other positions or areas that we've invested in the portfolio that touch that idea that we still need to continue to build more homes here in the United States?
Well, we deliberately go out and look for things that are unloved and unwanted at the time. What allows us to be unique is we have a very, very long-term time frame. Most of the world is much shorter term. So we're quite comfortable with purchasing something at $125 a share, and who knows, it may go down to 100, and we'll continue to add to our position. But to answer your question, some of the other areas, companies we like Weyerhaeuser as the largest private landowner in the United States, and has, I think, about 12 million acres of trees. And also that land also produces revenues from other sources like minerals and oil and gas and such. And they've also expanded in several other businesses that look very promising. And a land company that we've loved for a long time is 5 Point Holdings. We originally purchased that at $14 shortly after its IPO. It trades at about $5 now. It's been an absolute disaster if you look at it from our initial investment, but we've added to that position over time and continue to like the management team there, who took over a few years ago, and the changes that they're making. And then others we'd be looking at would be the home builder section. Of course, we just lost Tri Pointe as part of our portfolio, so we'd kind of like to replace that sector with another one that's down and out at the moment, although we have not done a write-up on it or decided which ones to purchase, if any.
So let's do a recap here. I mean, just overall lessons learned through the experience of buying, holding, and selling Tri Pointe, and how will our process continue to get better having owned this position?
I think for me, this was like a relatively straight down the middle purchase for us, like good management team, business model that we understand, relatively good business in a theme that we continue. The theme is America is significantly underbuilt, in a theme that we already have significant knowledge on. So I think for me, it just kind of reiterates we have a good process. This idea was straight down the middle for us, and just try and find other ideas just like it.
Right. How about you, Peter?
For me, any investment, from my opinion, it needs to be obvious to me that it's a good value. It always has to have all kinds of warts on the investment, that it's unloved and unwanted, but I believe it's for the wrong reasons, and I'm taking a longer term perspective. And my feeling on Tri Pointe is it's mixed feelings, because I would have been happy to own Tri Pointe for the next 10 years. And you start getting an affinity for the management team and what they're doing and their repurchases and stuff of that nature. So it feels a little painful, but also the 30% premium that we got and we're able to put that on the sideline for clients eases that pain.
Absolutely. Well, this has been another great recap. Thank you guys for spending some time just to talk through this. I think these calls have been helpful for clients who want to understand what full cycle investments at O'Keefe Stevens look like, whether that's good or bad. So we'll continue to do these recaps, and appreciate both of your time and thoughts going into this.
Thanks, Justin.
Thanks, Justin.